Cost accounting is a fundamental aspect of management accounting, providing detailed information on the costs associated with producing goods or services. It plays a crucial role in budgeting, setting prices, and making strategic business decisions. Central to cost accounting are three primary cost elements: direct materials, direct labor, and overhead. Understanding these components is vital for accurately calculating total production costs and assessing operational efficiency. Direct materials are the raw materials that are directly traceable to the production of a specific product. In other words, these are the essential components that make up the finished product. For instance, the steel used in car manufacturing or the wood in furniture making are considered direct materials. The key characteristic of direct materials is their traceability to the end product. They are quantifiable and can be directly allocated to specific goods or services. The cost of direct materials is typically variable, changing with the level of production output. The accounting process for direct materials begins with their purchase, which is recorded as an increase in inventory. Upon use, the cost is transferred to the work-in-process inventory account and eventually to the cost of goods sold as the finished goods are sold. Direct labor, or DL, refers to the wages and benefits of employees who are directly involved in the production process. These are the workers who physically transform materials into the finished product, such as assembly line workers in a factory. Identifying direct labor is pretty straightforward. Direct labor is identifiable by its direct contribution to the conversion of materials into finished goods. Like direct materials, direct labor costs are typically variable, correlating with the level of production. Accounting for direct labor is an essential part of cost management. Direct labor costs are recorded as they are incurred, reflecting in the work in progress, or WIP, inventory. As products are completed, these costs are transferred to the finished goods inventory and eventually to the cost of goods sold, or COGS, upon sale. Overhead, or manufacturing overhead, encompasses all production costs not directly traceable to specific products. This category includes indirect materials, indirect labor, and other indirect costs. Components of overhead: indirect materials. These are materials used in the production process but not directly traceable to specific products, such as lubricants for machines. Indirect labor: wages for employees not directly involved in production, like maintenance staff or supervisors. Other overhead costs. This includes a range of costs such as utilities, depreciation on manufacturing equipment, rent for the production facility, and any other expenses necessary to maintain the production environment. Overhead costs are typically accumulated in a separate overhead cost pool and then allocated to individual products based on a predetermined overhead rate. This rate is often based on direct labor hours, machine hours, or any other appropriate allocation base. Accurate allocation of direct materials, direct labor, and overhead is crucial for determining the true cost of products, setting prices competitively, and making informed strategic decisions. Misallocation can lead to underpricing or overpricing products, affecting profitability and competitive positioning. Understanding and accurately accounting for direct materials, direct labor, and overhead costs are foundational to effective cost accounting. These elements provide the critical data necessary for evaluating production efficiency, setting prices, budgeting, and strategic planning. As businesses strive to optimize operations and enhance profitability, the role of precise cost accounting becomes increasingly vital, underpinning the financial decisions that drive success.